Good day and welcome to Sky Gold Limited Q3 and 9 months FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, Mr. Parth.
Thank you, Manav. On behalf of Orient Capital, I welcome you all to Sky Gold Limited's Q3 and 9-month FY24 conference call. From management side, we have Mr. Mangesh Chauhan, Managing Director and Chief Financial Officer, Mr. Darshan Chauhan, Whole-Time Director, Mr. Mahindra Chauhan, Whole-Time Director, Ms. Nikita Jain, Secretarial Advisor, Mr. Jayesh Sanghvi from the finance team. I hope everyone had an opportunity to go through our press release that we have uploaded on the exchanges and the company's website. A short disclaimer I would like to say before we begin the call. This call may contain some of the forward-looking statements which are completely based upon our belief, opinion and expectations as of today, which statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mangesh Chauhan. Over to you, sir.
Thank you, Parth. I am Mangesh Chauhan, MD and CFO of Sky Gold Limited. A very good morning to all of you, ladies and gentlemen, and thank you very much for attending our Q3 earnings call today. We intend on keeping our investors and analysts familiar with an update about a development in our business. We have had opportunity to meet some of you at our annual general meeting. Otherwise, to my mind, thus it would be worthwhile to dwell a bit of our company and brief you all about the products we manufacture and business growth. I trust this will be helpful to all the participants. I must state that all the discussion here will be within boundaries reasonably imposed by the company's strategic and competitive positions. As you are aware, Sky Gold Limited started its journey 18 years back and emerged as a leading Mumbai-based jewelry contract manufacturer specializing in designing, manufacturing, marketing of executive gold jewelry. We mainly deals in lightweight 22 karat and 4 karat jewelry. We started working with many of Indian large retailers early in this jewelry. Having spent a good part of decade working with retailers, we have developed very good and granular understanding of end consumers. The jewelry that sells in the town in South India may not be fast moving in other part of the state, let alone another part of the country. We solve an important pain of jewelry retailer, which is inventory management. If our retailers are able to liquidate, sell our design quickly, we would be in a position to generate more sales or orders. Ours is the quick, sticky relationship with the relation. We have a design team of 50 plus jewelry designers. These designers help us to build a design library of 9 lakhs designs, in which 2.5 lakhs designs are live right now. We constantly refreshing our designer, ensuring that our jewelry moves quickly off our retailer shelves. Due to the diversity of our clients and the varied region each of our clients are present in, we have developed an ability to design this jewelry product as per latest trends, fashion and demographic presence of the end user. We aim to achieve revenue of 1,700 crore in FY24 and 5,000 crore over next 3 years, led by new client addition, increasing wallet share from existing clients, showroom additions by clients leading to new showroom demand, export demand shift from unorganized to organized. On international front, Sky Gold exports to Dubai, GCC, Singapore and Malaysia. The contribution from international business was 3% in FY23. Going ahead, we aim 30% contribution from international business over next 3 years. The current demand for Indian lightweight jewelry is resident in international market, which we are targeting to cater going forward. Furthermore, we are focused on expanding our services to 40-50 good corporates in corporate market over next few years. Given the rich promoter experience, a strong R&D team, extensive design library and strong track record, Sky Gold Limited is increasingly becoming a preferred choice for the lightweight jewelry manufacturer. We are optimistic about the future and confident in our ability to navigate challenge and achieve our goals. We have been working towards creating an organization that is more transparent, technology evolved, and one that has best of corporate governance practices. Now I would like to hand over the call to Darshan Chauhan from his remarks, and you to Darshan.
Hello, good morning to all of you. I am Darshan Chauhan, Whole-Time Director of Sky Gold Limited. Now I will discuss the Q3 FY24 financial performance. The consolidated revenues for the quarter stood at 460 crores versus rupees 267 crores in Q3 FY23, thus registering a growth of 72% on year-on-year basis. We have witnessed strong revenue growth during the quarter in both domestic and international markets, given the festival seasons around the world and especially in the Indian market. During the quarter, we have also successfully added new clientele in our export market to fragment customer base and increase our revenue share from export business. Margins-wise, EBITDA stood at 18 crores, saw a growth of 48.5% year-on-year over EBITDA margin for Q3 FY24 was 3.9% as compared to 4.5% in Q3 FY23. PAT stood at 8.9 crores, saw a growth of 40.8% year-on-year. Our PAT margin for Q3 FY24 was 1.9% as compared to 2.4% in Q3 FY23. Moving to 9 months performance, the consolidated revenues for 9 months FY24 stood at 1232 crores versus rupees 884 crores in 9 months FY23, thus registering a growth of 39.4% on year-on-year basis. Margin EBITDA for 9 months FY24 stood at rupees 52 crores, saw a growth of 110.8% year-on-year growth, reported an EBITDA margin of 4.2% as compared to 2.8% in 9 months FY23. PAT stood at rupees 27 crores, saw a growth of 114.5% year-on-year. Now I would like to hand over the call to Mr. Mahendra Chauhan, our whole-time director, for his remark, and then we will open the floor for question and answer session. Over to you, Mahendra Chauhan.
Hello everyone. As you are aware, we have received fresh capital from our preferential allotment during the end of the quarter. This capital would help the company to strengthen its liquidity position, and this has already resulted in a rating improvement. The number of banking partners have also increased as a result. Earlier, we never used gold metal loan. Now we would be utilizing gold metal loan. The shift would start happening from first quarter FY25, and this would reduce our interest cost. The focus during FY2025 would be to improve productivity and reduce the working capital cycle. We target to increase and achieve 3x sales from the existing workforce. On the customer-facing side, we have started working on an application to seamlessly interact with the customer. The benefits of all the measures would be visible during quarter 4 FY25. With this, I would request to open the floor for a question and answer. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Vinamra Hirawat from JM Capital. Please go ahead.
Hi, am I audible?
Yes, sir, you are. Please go ahead.
So my first question is, could you please go over your annual capex over the next 2 to 3 years, the capex you're doing every year?
So we have already done the capex in the current year, and in ongoing years we will not need any major capex like we have done the 15 crore capex in when we shifted to the new facility. And in ongoing year we will like to add 50 lakhs or 1 crore machineries per year. It will be not a major capex we will do in next 2 years. Already we have done the major capex in this year only with the new facility. So.
Okay. And my second question is, your Q2 investor presentation states that, by the end of FY24, of course, your capacity is, I think, 750 kgs a month. And the presentation says you'll be utilizing 700 kgs a month. Is that the capacity utilization we are at now? And what is the utilization you see, going forward in FY25, 26?
Yeah, we are using, we have a capacity, we can produce 750 to 800 kgs per month here.
Mm-hmm.
Right now we are producing 250 to 275 kg per month.
Okay.
So we can go up to triple capacity in 2.5 years, 3 years in here in this facility.
So do you have like guidance on capacity utilization for the end of FY24 and end of FY25 and 26?
We are targeting this year 1,700 crores. So in 3 years we are targeting 5,000 crores. So it will go from 250 to 75 kgs to next year 450 kgs, and then next year to 550 600 kgs, and the third year it will be the maximum utilization to 750 kgs.
Got it. Thank you. I have one more question. So what would be the channel? Of course, exports are going to be a big part of your revenue. So what is the channel for that? Do we sell, direct to end consumer via intermediates? How does that work?
This is coming.
Hello?
Whose voice is coming? Darshan, please be mute.
Mr. Vinamra, there is a lot of disturbance at your end. Can you please mute yourself?
Sorry. There's no disturbance on my end. Quiet room.
Kiri's PMS?
Yeah, now it's okay. Can you repeat your question, please? So
yeah, I was just asking, what is the channel of export? Are we selling, direct to the customers or via intermediates?
We are exporting to corporates there also who have 200, 300 stores, and to distributors also who are supplying to the small retailers there in the Gulf country and Malaysia, Singapore. So both mixed blended business is there. 50% is from the corporates and 50% is from the distributors who can, as a big manufacturer, we cannot reach to the small retailers. So we give to the distributor and they supply to them.
Okay. So the mix is 50-50, right?
Yeah, approximately, yeah.
Okay, thank you. I'll join back in the queue for later questions. Thank you.
Thank you. We have our next question from the line of Jehan Badha from Nirmal Bang. Please go ahead.
Yeah. Good morning, sir.
Good morning.
My question is pertaining to the debt and interest cost. So what will be the debt levels by this year end and next year end? And what are the plans regarding gold metal loans? How much of total debt would be replaced by gold metal loan and by when? And interest cost for next year, what will be it in the range of?
We are right now using 160 crore of debt, and we will be increasing it to 240-50 crore something in the next year, in the next coming year, and we will be utilizing 70 to 80% of the GML facility in that. So our interest cost right now it is 0.90 of the sales, and it will help us to reduce 0.40 basis. The interest cost in the next first quarter it will show key results will come. So we will be utilizing GML from the first quarter itself. Banks are reviewing out the facility and changing our facility to CC to GML. It takes times of 30, 40 days, 50 days. So from the next first quarter, we will be reducing our finance cost by 0.30, 0.40 basis. 70-80% will use the GML. So it will help us to increase our PAT margins here.
Right. So, sir, you mean that entire bank loans will be shifted to GML, right?
First of all, 80% we will use. Bank uses 80%. When we utilize it maximum to the maximum, then they in the second quarter we'll change to 100%. So we have to use first 80%, then the bank give us to use the 100% also. So first quarter we'll use 70 to 80%. Inventory will be funded from GML only.
Right. So, sir, approximately you said in terms of as percent of sales. So, approximately if our current cost of debt would be in percentage terms, let's say 10-12%. Can you explain in that terms and what will be the interest cost of GML?
So currently we are interest cost is 9.5%,
Okay.
9.5%, and it will be come to 4.5% is the GML cost. 4% and plus other costs, it comes to 4.5. So interest cost will be come to which now it is 0.9 of the sales. It will come to 0.5 of the sales.
Right.
So our inventory will be funded by GML, gold metal loan, and receivable will be funded through the CC limit balance 20-30% from the internal funds and CC limits here.
Okay, fine. Thank you, sir.
Yes.
Thank you. We have our next question from the line of Bharat Gainani from Money Control Pro. Please go ahead.
Yes, sir. Thank you for the opportunity and very good set of numbers. So, sir, if I see the balance sheet currently, we have debt of about 150 crore and we also have a long-term investment of about 65-70 crore. So I just wanted to check why is there a debt and a very big number of investment in the terms of balance sheet, and now that you have already stated that you will shift to gold metal loan, so we would be required to keep another, we need to keep deposits in the form of current investment or a long-term investment. So will that affect, so the first question is how much will the investment in, since you are taking the gold metal loan, what effect it will have on return on capital employed? Thank you.
Yeah. So our debt is largely for working capital. Our working capital days would reduce from already we have reduced from 21 days to 19 days, and we are targeting 3-4 quarters will reduce to 15 days. So our about the investment you asked, it's about 60-70 crore investment of blue chip shares we had before 4 years in our balance sheet, and we have pledged as a collateral with the banks. So we would be replacing it with the FD, and will as in this quarter, in first quarter, in March we will get that investment back and we'll upload it. So we are changing the collateral with the shares with FD. And about the GML, it will help us to reduce our cost by 0.40 basis or 50 basis, as the GML gold metal loan is 4.5% and CC limits are 9.5%. So it will help us to increase our PAT. Our inventory days would be reduced to 25 days, which is now 30 days. And receivables, we are targeting to bring it to 15 days in 3-4 quarters. So total working capital days would move to 40 days. Which was last quarter was 60 days, now it is 55 days, and we are targeting it to take it to 40 days, which will help us to increase our working capital. Yeah.
Okay, but sir, if we are taking GML, so we would need another 30-40 crore of investment in FD, or this much 70-80 crore that is there on the balance sheet.
In the shares, bank were taking 50% collateral. Now they are diluting to 30-35% collateral. So we will need to give only 30-40 crore FD only. Again, 70 crore shares we will receive back, and we will need to give 30-40 crore FD.
Okay, so additional 30-40 crore another investment will go up by. And
we will take back the 60-70 crore securities back, and we have to give 40 crores FD. They are reducing the collateral. As our rating is improved, minus to BBB stable. So all the bankers we have taken, and they agreed to take it to 35-30% collateral. So we'll receive 70 crore shares back, and we'll have to give 40 crore, 45 crore FD. So our it will reduce our investment here.
Okay, but then we said that we will also increase the debt by about 80 crore in the form of next year. So for that we are switching to gold metal. So we will require an additional investment in the form of collateral. Any other investment is required when we are moving to gold metal loan?
I think right now we have given 70 crore investment for 160 crore. So we'll replace it to FD, and it will go up to 250 crore CC. So our investment will be only change from shares to FD, but it will not increase. It will be up to 70 crore only, because they are reducing the collateral, diluting it.
Okay. So overall investment will be in 70 crore range only, what it is.
It will be in the range, yeah.
So basically, and if our PAT margin increases, then overall, and the working capital comes down and investment stays where it is, so our return on capital employed or return on equity should improve going forward. Is that what the guidance is?
We are targeting 100%, yeah.
Okay. So thanks and all the best from my side.
Thank you so much, sir. Thank you so much.
Thank you. We have our next question from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, in terms of guidance, you said 1,700 crore for this year, which would imply about 460 odd crore, 465 crore types for Q4, which is like higher than this December quarter. But isn't December quarter like the best quarter for jewelers because there is a better demand?
Yeah. So December quarter is 460 crore we already reached, and we have to reach now 450 crore in this quarter. So December quarter is 100% is good, but we have added now in January exhibition we did in the first of January first week we have done an exhibition, and we have added many new clients of exports also and domestic also. So that will also help us to grow our revenues. Many clients are added and many clients have given orders in this exhibition for this quarter. So I think new clients and existing clients both will play the role to drive our revenues.
Got it, sir. And sir, in terms of margin side, there is a slight reduction this quarter compared to last year. So any color on that, and what should we expect going forward?
Yeah, we are in the scaling mode. So we in some new clients we have to we are entering with the regular products and attractive price. We are entering with them, and after they are on board, we in the second, third quarter, we in the same client we give new products, monogram products and fancy products. In that we create margins with them only. So we are in the scale mode. We are targeting 5,000 crore in 3 years and 10,000 crore in 6 years. So keeping in mind that also we are acquiring new clients, new corporates, export clients also. So while entering them, we have to give them attractive price. When we increase our product range in the same client, we increase our designing products and all, and then in that only margin increases. So we are gradually increasing in the next quarter, and 2-3 quarters we will be seeing that our gross margin will also increase, and our finance costs will help us to increase our PAT margins.
So sir, given we are adding so much clients and we want to increase fast, so is it like we want lower margins and increase the top line? How should, as in for coming few quarters, because margin should be here only or slight reduce, and then for coming from for FY26, like that is the next year, then we should improvement in margin, or how should we think about it?
No, we will be gradually increasing margins also, because from the last quarter, if we compare, we have slightly improved our margins PAT wise. So we are working on our gold loss also. We were small manufacturers. We were working manually. Now we are implementing ERP system for the gold reduction, better utilization of our existing facility. This will help. ERP system will help us to improve our existing facility. So that will help us to improve our gross margins. So we are concentrating on the gold loss, our better utilization of the facility. We have incurred the fixed cost already. So if the turnover goes up, it will in the same cost. It will help to increase our gross margin. ERP will help us to track our gold loss, inventory perfectly. Gradually, margin will improve every quarter. So we are looking at 3x revenue from the same employees, or rather little bit employee increasement. So I think we will be increasing our gross margin gradually also, and scale up also. We will not reduce our margin. So you got to see from the last quarter we entered our new facility. In the next quarter our PAT is increased. Gross margin obviously little bit hampered by 20 point basis or something from the last year on year. But now we have good clients. We have entered new clients. So we will increase new products in that, new design in that, and we'll increase the margin also. So it will be go parallelly scaling also and improving the margin 0.20 basis every quarter. And we are looking forward to target EBITDA to increase from 3.9 to 4.5, 4.6, which will come from our productivity also, from controlling the gold loss also, utilizing the facility at the maximum on our end of the same cost or a little bit cost increasing, or the finance cost for the PAT margins. So both will help us to increase our PAT margins. And obviously, we are scaling up with the new clients or all, so it will go both together.
Got it, sir. Thank you and all the best.
Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Shubham Upadhyay from the Microcap Minute. Please go ahead.
Good morning, everyone, and first of all, congratulations on a good set of numbers. So I was going through the press release, and you had said that the new capacity has been operational, and it has a capacity of 750 to 800 kg per month, and there is also a capacity utilization of 60%. So that puts the number to around 450 to 480 kg per month. So are we doing that number currently?
No, we are doing 250 to 70 kg per month. Employee-wise, we have utilized 60%. For the machinery-wise or machinery we have installed, we don't know. But employees-wise, we have to keep the designer employees, the workforce. For that, we have utilized 50 to 60% right now. And now in the quarter, we will produce with the same employees, we produce so it will go to 350 kg, 400 kg in the same strength. After that, we will encourage more employees. So, in the way of 60%, we are utilizing the employees and all the things. But manufacturing-wise, we are producing 250, 300 kgs.
Okay, so...
I hope you understand my answers.
Okay, yeah, sure. So my next question is is there any guidance on the number? What could be the expected number in the coming quarters of the next financial year also?
So we are targeting 1,700 crore revenue, total revenue. Already we have crossed 1,250 crore. In the coming year, we are targeting 2,500 crore approximate revenue in the next year. So we will be reaching 5,000 crore in 3 years we are targeting.
Okay. Is there a number kg-wise?
Yeah, kg-wise it will be, now we are in this year, we are produced 250 to 70 kg per month. Next first quarter, I think we will be producing 350 kgs per month. In the next year, 350 kgs to 400 kgs. In the next year, 400 to 500 kgs. And the third year, we will be going up to 700 kgs here, approximately.
Okay. So my next question, this is basically my last question. So you have also mentioned the doubling of the in-house design team from 100 to 200. So what is the timeline of this hiring?
Right now, we have a designing team, good designing team. We need to, 1 or 2 designers may be added, but no need to enter more. As soon as we touch our revenue of 3,000 crore or 2,700 crore, and we'll be targeting to 5,000 crore, we'll be adding some more designers as and when required. So right now, we have a good strength of designers and employees. So we needed not to increase more fixed costs right now to achieve 2,500 crore, 3,000 crore. We have the strength. We have the machinery. We have already done the capex. So we have to just keep on producing more, getting more design from the designer, latest design, and uploading the market.
Okay, thank you. Thank you for the answers. I will rejoin this.
Thank you. As a reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Nitin Gaur, an individual investor. Please go ahead.
Yeah. Good morning, sir. My question is related with where we stand in terms of B2C business, and have you onboarded Tanishq and Reliance also? Thank you.
So right now we are not focusing into B2C business only for now. And Tanishq and Reliance, we are in talks with them. They are not onboarded till now. Primarily Tanishq, we are in talks with them. We have shown them our factory and all. So let's hope for it. So we are expecting them. Yeah.
Mr. Nitin, do you have a follow-up question?
No, thank you.
Thank you. As a reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
So what is the difference in margins between your domestic and international business? Because you're forcing international business to contribute a very significant percentage, around 30%. Is there any margin difference here as well?
Some margin difference there. It cannot be disclosed due to competitive reasons, but some difference is there from domestic and exports. Yeah.
So are exports better than domestic?
Slightly better than domestic. Yeah.
In margin terms.
Yeah.
Okay. And your currently your PAT margins are hovering between 1.5 to 1.9%. I think this last quarter was 1.9% or
1.9.
You see these?
Yeah.
Right, 1.9, right?
Yeah.
Do you see this moving to 2.5 to 3% in the next 2 to 3 years or in the foreseeable quarters?
We are targeting, first of all, to take it to 2.5% in 3-4 quarters. And then after reaching that, we are targeting it to, after 1.5 years or 2 years, we will be reaching it to 3% we are targeting to take. So in 3-4 quarters, we are targeting that our PAT margin will increase to 2.5%, parallelly growing our scale, our target of productions also.
Okay. Okay, got it, sir. Thank you. I'll get back in the queue.
Thank you. As a reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, sir. Good morning. So just please, once again, if you can elaborate on your strategies to inch up the EBITDA margins. And I believe in the previous answer you mentioned taking it to 4.5%. So is that overall annual margins you expect or for the next quarter?
Yeah, in 2 to 3 quarters, we are targeting to take it to 4.5% EBITDA, which will come from our better utilizing our existing facility. We are implementing ERP system, which will help us to track our gold loss. Inventory management will be more precise in that. So it will help us to grow our EBITDA margins. Addition of new.
But immediately in the next quarter, any expectations? Like what range you expect?
You will see the impact in all the 3 quarters, coming 3 quarters, in next quarter also, in the first quarter also of the new financial years, and the second quarter also. So you can see the results in next quarter also, in the upcoming quarter also.
So next quarter will be better as well.
There will be
some improvement. Yeah. Okay. And how many new clients have you added?
We have added big clients of 10 to 12 more big clients we have added.
Okay. Any target ahead? How many? Or is it an ongoing process?
Pardon?
Is it the range, quarterly range you will follow, or you expect more to be added ahead?
About the revenue you are asking?
No, client addition.
Yeah, we are adding clients also, and we are focusing on our focus will be to gain the share of the business with the existing client also. So market is huge. Okay. We are getting market share from our organized share. Unorganized share is shifting to the organized corporate. So we are also getting the benefit of them. So existing client also we are getting the shares, and we are every quarter we are doing the exhibition and keep on adding our new clients also. So we are gaining the share outside India also. We have started exports to UAE, Singapore, Malaysia. So Indian manufacturing is very cost effective and very good for export markets. Right now they are seeing very good for Indian manufacturing, design wise and cost wise also we are very effective from other countries. So we are really seeing this quarter we are showing good growth in the export.
Okay, got it. Thank you. All the best.
Thank you. A reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Vinamra Hirawat from JM Capital. Please go ahead.
Oh, sorry, I must have pressed it by mistake. I don't have any more questions.
Okay. Thank you, sir. We have our next question from the line of Bharat Genani from Money Control Pro. Please go ahead.
Yes, sir. Thank you for the follow-up opportunity. Just two questions. So one is that the current debt level is about 160 crore odd. And hello. Yeah. So out of this, the next year target is to reach about 250 crore. So from this 250 crore, the entire will be gold metal loan, or gold metal loan will be a portion of that?
80% we will be using gold metal loan because it will reduce our capacity. But major bank give 80% limits of the gold metal loan, and 20% they give us CC limits. When we utilize properly 2-3 quarters maximum, then they give us 100% also. So we will be keeping it to 80%.
Okay. So out of that, out of the 250 crore target of debt that we have for the next year, 80% of that means roughly about 180-200 crore will be the gold metal, right?
Yeah.
Okay. And another question is that just one clarification, like we saw the preferential allotment happen 2 months back, and there was another fundraising in which the promoters also participated. So I just wanted to know, is there any other fundraising plan, or for now we would be done with the fundraising?
We are not planning any fundraising right now because already 2 months back only we did, and so we are right now not in the mind to raise the fund in 2 quarters here.
Okay. Thanks and all the best, sir. Thank you.
Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Ajay Shah from Crisp PMS. Please go ahead.
Thank you, sir, for the opportunity. I would like to ask what is the market share of unorganized players and organized players in your industry, and what is the other competitors, big competitors for you?
So, I will not like to name any. In South also, one competitor is there. I will not like to name anybody. This is about the competitor. What was their question? About
market share of organized players and unorganized players in your industry.
Okay. So, organized player is about 60-65% market share is there. 35% is the unorganized market, which is shifting to the organized market. So, corporate clients, which is our client, we are doing major business with the corporates, channel stores. They are gaining the share of unorganized to organized because of this government. I hope this government continue and in this government, organized market is gaining the shares.
Okay. And sir, we are targeting for 5,000 crore revenue by in next 3 years. So it is implying 40 to 42% CAGR revenue growth. So what gives you so much confidence? Can you share in a detail to achieve that target?
You can see before 10 years we betted on the corporate. We started business with the corporates who had like Malabar Gold, Joy Lucas Kalyan, who have 20 stores, 30 stores. That time they were having. Right now they are having 250 stores, 300 stores, 400 stores. So we are in the boat with the corporates, which are we have the clients of major large corporates like 50 to 400 stores. Those who have large corporates, we have clients who have 10, 15 stores, 20 stores also. They are small mid corporates, and we have clients who have 2 to 5 stores, which are small corporates. They are going to be a large corporate in 3-4 years or 5 years. They are also growing to 50 stores, 100 stores. They have the target of that. So we are confident that this unorganized market will also shift to the organized one, which are the corporates, which are our clients. And every year, Indian jewelry market is growing by 10 to 12%, which in that share also, corporate will gain the major share of that. Unorganized will not gain the share. So indirectly, we will have an upper end as a manufacturer. We have this client. So their stores are increasing drastically. You see, Kalyan Jewellers has signed 80 stores in this year. Senco Gold has signed 40 stores in this year. So drastically, they are growing their store and acquiring the market, and we are in the same boat.
Okay. Thank you so much, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Sumit Bharadwaj from Global Web Flavors. Please go ahead.
Yeah, hello. My question is regarding, I want to get the update on your business from the US. I believe that last quarter you started a website in US.
The voice is not coming proper. I am not hearing it. Can you keep a little bit louder?
Sumit, I will request you to use the handset while asking the question.
Am I audible to you now?
Yeah, right now it's very clear, yeah.
I want to get an update on your US business.
Yeah.
Last quarter you started a business with the US, like you opened a website there. So may I get the update on this?
No, we have not done any business in the US, and we have just opened a subsidiary. We were to do the online B2C business. We have a plan, but we have not concentrating on that because in the B2B only its potential is very good. We have onboarded new clients, and our existing clients are giving us good orders and contracts. So right now we are scoping on B2B only. We are not enter any expenses for that US market or done any R&D expenses or nothing expenses has been done for that. So we are not concentrating on it.
Okay, fine. Thank you.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to Mr. Mangesh Chauhan for closing comments.
Thank you so much, everybody, everyone for joining us. I hope I have been able to answer all the questions. In case you have any query, further details, you may please contact Orient Capital or our investment relation partners. Thank you so much being a part of Sky Gold Limited, and we hope we have a good journey together in forward.
On behalf of Sky Gold Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.